Good morning. It's Tuesday, October 28th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So we're setting up for another busy day. You look at gold futures down about $85, bouncing off 3,900 here, trading last at about 39.35 as of this recording. So it's still down about 2% after breaking through that 4,000 mark. And we saw really quite a bit of trading right around the 4,000 level here. So this continuation and washout here could be some broader liquidation here from Europe, from Asia as well. You look at the silver market down 50 cents, but well off its lowest levels here. The lows being the overnight session 45.51 with futures trading last at 46.28, still down about 1%. It's a sea of red on much of the screen here. Outside of the agricultural markets, the foreign currencies and U.S. equities are slightly higher on the session here. So gold, it did slide below that $4,000 a mark and extended its losses here as progress between the U.S. and China trade deal seemed to take out some of that safe haven demand. The trade agreement between the world's two largest economies may ease some of the economic risks here and the geopolitical tensions that have bolstered the precious metals recently. That's why we saw copper futures, Bitcoin futures, U.S. equities, agricultural products, and also energy products all pushing just on up here, and some of that recent safe haven demand kind of coming out of the woodwork here and really working its way lower. So silver futures having some of that ease here as far as some supply tightness going on between India, China back online, London able to bring in some of that silver there as well, that those leasing rates had fallen dramatically from about 35% down on to about 5%. So I'm going to run that data here after I finish the video up. So you look at the technicals, first lower high on the charts in the gold market here. It just means that you want to have more of a cautious approach. Many of the traders that have been working closely with me have reduced their position to their minimums and really trimmed over the last week and a half here as we started to get quite hot here with that pot really boiling. And many people working closely with me have reduced near those highs, taking their position down to their minimums, and or have a bit of a diversified portfolio where if you stayed a bit overweight on some of the precious metals while you were adding Bitcoin, which was a recent purchase here last week, copper futures, Russell, and also the NASDAQ. So you're seeing this balanced approach take place. I look at futures commodities trading as a horse race, and you really want to try and get that trifecta for your best payout here and kind of insulate yourself from just being all in on one particular commodity. Now, if you see a move like what we're seeing in the overnight and yesterday, and it's really triggering you, chances are your position sizing is just too big and you're not really risk managing it properly. So you'll want to adjust that. You want to reach out. I could help you out with some of those different things here. So the ETFs, they are selling. So on gold, it was 448,000 troy ounces of gold. That was the most in 6 months. If you look at some of the levels of resistance, really it's that last Wednesday, Thursday, the overnight highs near 41.75. That's your major resistance point there. And then 41.31.90. I volatility adjusted a model last night as a trend reversal point where we would signal a possible run back up to that level and then to new all-time highs if we can get above it. We sliced through those key levels of support, that 40.21. That was the October 22nd lows, 4,000. That was more of a day trading affair yesterday. When you see the market come around and stop at these whole numbers, like what happened when we broke through 50 the first time on silver, when we cut through 40, it seems to be just this day trading affair where people are buying below that level and selling above that level, and that's where the algos really kick in as well. Now you look at some levels that I don't want to see gold futures trade below, and it's really 39.17 and 3900. And the reason is because I follow a lot of the trend following funds, and I know exactly when they're looking at adding to these positions or initiating coverage in them because of the fact that I've modeled trend following technical indicators and then also technical systems that are widely used amongst different trend following funds for their entries and their exits. And those are the levels here where I believe that they will start initiating short positions. Now, they don't look at anything else only other than technicals, volatility here, and price momentum. So they're looking at an extension lower if we break below those levels. It's not to say that they would be right on their positions here. It's just to say that it's one balanced approach that they would take on these particular markets. Silver, 45.32 is the level where if we break and then we initiate the next day lower, I believe that the trend following funds will also initiate shorts as well. You don't have to follow trend following funds. It's just one particular segment. Remember, there's systematic funds, there's volatility funds, there's trend following funds, there's a number of different things, there's discretionary funds as well. They just trade off of different types of methods here, and there's a lot of different methods in the madness. So looking at the checklist on the pulse of the markets, the trends, the FX, you got the dollar just slightly lower, down 13 points at 98.43. Some of the foreign currencies slightly higher, the pound, the Canadian dollar just a bit weaker here, but really muted reaction in the currency markets. 10-year treasury yields, well, they are sliding lower back below that 4%, sitting at 3.98%. A lot of people were looking at the 10-year futures to the upside here, putting on some call spreads as well yesterday in that particular market. You got the volatility index, well, that's still well below the 20 level. Coming up just a notch here, sitting at about 1810, but really, as long as it's below 20, I believe that you'll see it's investable as far as in U.S. equities, and the dip buyers will be quite active. Now, if you look at gold volatility, that continues to crash to 23.94, collapsing below the 30 mark. But really, the key level is going to be that 20 mark as well on gold volatility. If we can go back below that, you'll start to see some of the ranges compress on the gold market. And what will happen is people will be able to model it, risk manage it better, because frankly, when you get $2 moves in silver, you get $150 moves in the gold market, it's tough for people to just come in and outline, here's the level I want to get in, here's where I would put my support, my stop loss, here's where my target would be. And what happens is you get this volatile move and this craziness, and they just get chopped up in the market. Whereas when you come below like a 20 level on volatility, then people could effectively, I'm not saying they're going to trade better, I'm just saying that the frequency of triggering their stops and their targets becomes much greater at higher volatile levels. So you'll have a different mindset of a trader come in where it's just too much craziness. I'm going to sit back and watch, and that's what different volatility regimes tend to dictate. Now, if you look at the U.S. equity markets, the global markets, your stock futures, they're a little changed after closing near the record highs. You also have the big catalyst for traders. They're going to start tomorrow here, where we got 2 big days that include a Fed decision, and you're going to have 5 of the Magnificent 7 here reporting results. The equity bulls, they are lining up some wagers that the S&P 500 will surge past that 7,000 level, but now that we've seen some of that volatility pass with us coming back below that 20 level, you got the NASDAQ positioning for increased basically increased investor flows here because of the fact that we're seeing some of that fading momentum risk here coming off of the markets. You go up to Europe and Asia, European stocks, they slip from the record high. As the investors here, they're bracing for a busy few days here with company earnings, central bank decisions, and then you have some key Asian benchmarks. They declined slightly, with South Korea, Japan leading the sell-off ahead of the key interest rate decisions. Global mega cap earnings, the meetings between the leaders of the 2 largest economies here, that's having the MSCI kind of coming back a little bit, down about 0.6%. So we're at that critical part, the crucial part of the earnings season. 70% of the S&P 500 members have reported earnings so far here, and they've all exceeded some of those sales estimates here. The highest portion of positive surprises in about 4 years, with 85% of the benchmark managing to beat earnings here. So I'm watching some of this movement in the metals markets here. So that's why I'm slightly distracted at the moment here. But you look at the economic data coming out, most likely going to be delayed. You look at the central banks, we're in the blackout period. The CME's Fed Watch tool, 97.8% chance they cut 25 basis points tomorrow. You go out to December, 95% chance they cut 25 basis points December 10th meeting. The ETF flows, and this is what I'm really watching. They sold 448,000 ounces on gold, most in 6 months. It's the biggest one-day decrease since April 25th, 4th straight day of decline, longest losing streak since August 21st. You look at gold, it fell 3.2%. You go to silver, they cut 2.61 million troy ounces, 4th straight day of declines, longest losing streak since August 5th. I want to see where we hit these key levels, 3,900, 4,550, these overnight lows, and do the dip buyers come into these markets. So that's what I'm going to be monitoring here today. And it looks like they might be setting up to do so. So if you got any questions, you want to open up a futures trading account, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.